Good morning, everybody. It's Javier. Super excited to be with you here today. We haven't had our webinar in a little while for different technical reasons and scheduling conflicts and so on, but I'm very excited that all of you are here today. It's not going to be long at all. Just wanted to provide you more with news updates. I've been getting a lot of questions, a lot of some concerns and so on with all that's going on in the mortgage world, the real estate industry world, whatever you want to call it, and share with you some of my thoughts and also bring Rhett on board to be able to do that. And most importantly, to give everybody the opportunity to ask any questions you might have. Now, everybody is being muted just to control the background noise, if you would, but we're going to give everybody the opportunity to ask away here just 1 second. The first thing and obvious reason that I'm rounding everybody up today is to address the issues of the day, which are the rise in interest rates. I mean, it's not in your head. I've gotten a bunch of calls this week and about asking me for my thoughts and all this other crap. And so I just wanted to kind of do it as a group setting to let you know what I think. And then I'll let Rhett know or he'll let you know what he thinks. I haven't really spoken with Rhett. We don't have an agreement on what we are going to say or anything like that. We just are free-willed spirits and we're going to speak our mind. First of all, we're going to just talk about some of the things that are out there, which all of you or most of you should be aware, especially if you're active. If you're not active, you probably have no clue what's going on, but it's not your imagination. This is on the 19th, latest mortgage rate news. Rates jumped to the highest since March of 2020, which is basically when the pandemic started. Rapid rise in mortgage rates startles homebuyers, blame inflation fears. I don't think that's it, by the way, because I told you it was coming. I'll tell you which one I believe. U.S. mortgage rate interest rates climbed for fourth straight week, which is very, very true. And here's the real reason right here that I will tell you of all the stuff you're going to read about. If you're going to pay attention to anything, if you're going to read into anything, let it be this one right here, according to Javier. Mortgage rate rise to prepare for Fed rate hikes. And that's true. The Feds have not raised interest rates. Excuse me. They said they were going to raise them 3 years, at least 3 years. I mean, at least three times this year in 2022. They haven't started, but yet it's already going dramatically up. And the reason I say dramatically is because of the fact that from a historical perspective, they're still low. I mean, and they're going to stay very, very low. What effect we are feeling is with people in escrow that if rates go up, let's just say a quarter of a point or half a point, it could be the difference between somebody qualifying for a loan and now they no longer qualify for it. I'll use a perfect example of what you're going to see here, and that is with my daughter. My daughter's currently purchasing a home as we speak. The interest rate she had on an FHA loan was 3.625. And lo and behold, we have done everything we can on our end. I mean, we are a mortgage bank. And lo and behold, the best we could do was match it with no commission, no nothing. And now all of a sudden, with what has been happening in the last week and a half, we cannot even do that anymore. And so she's in escrow right now. She, like many other people, are pushing through. Like that's just the way it historically happens. But what's ironic is she started shopping around with us, with Rocket, and now the most recent qualification she got, and she's very well qualified, over 700, over 700 FICO. On top of that, she has, over 700 FICO. We're talking about, making, more than that, wait a minute, $200,000 a year, blah, blah, blah. Now the latest one came back was 4 from Rocket, which is a very good competitor of ours. So now we're back, to the 4s. And if she went with the 4s, her payment just went up like by $500 from what she had just from 2 weeks ago. And so if they can lock it with who she has it with, I'm telling her it's going to be her call, of course, in regards to that. But it might not even make sense to move forward with that. And so what I'm getting at is that when, people ask me, what are people that are in escrow doing? Well, most of them are closing because they were already locked, because they were already within striking range of closing, and that's just it. But there might be some instances where you might have to, as a loan officer, go back and tell them that, hey, by the way, because it wasn't locked yet, your new payment is actually going to be $200, $300 more. for no other reason that the rate went up. And that's it. And so what does that mean for us as loan officers? Well, a lot of lessons to be learned here, starting with the fact that in many cases, the refinance we were doing every 6 months of some of our clients, those days are gone. That's just the way it is. It's over as it relates to the people that were, refinancing every 6 months, unless there's a net tangible benefit, or NTB, that you have to meet in order for a loan to be approved to be cleared to close. And Rhett will take care of that. So don't worry about that. Don't slow down in any way, shape, or form. But I will give you my own personal advice, just like I've been giving you the entire time, forever now. And what I'm saying is that if there's ever been a time to brush off your skills in the field of, let's just say, working with buyers, this is it. Because of the simple fact that a lot of the refis that we were able to do just 3 weeks ago won't fly today. Now, thankfully, there's still a lot of people who never refied, and they are in the high fours or whatever the case might be. They're going to be hard to find. I'll be the very first to tell you, because if they didn't move when rates were in the twos, they're probably not going to move when rates are in the threes, 3.5, and they're only going to save half a point, a quarter point. It's going to be very difficult. And as the industry is cyclical, like everything in life is cyclical, you have to be very careful that when you price loans, you cannot price them the way we've been pricing them. And lo and behold, pricing actually improved while we quoted people rates. So we either made more money or offered them a lower rate. Now it's going to be the opposite, where you have to be very careful when you price. Don't price it in such a way that it has to be at this rate or it doesn't work, because more than likely, if it's taking a few weeks to close, like it will, that rate might not be there, or the pricing might change, meaning you make less, which is usually what I do when the pricing goes south on me. I make less, the client gets the same rate, or God forbid, you have to raise the interest rate on them, especially on a purchase. So if you have not been working with buyers recently, then you're going to have to start to learn that skill, because my prediction, I'm talking, you guys know who I am and who I run with. I run with different owners of schools, NMLS schools, and other places that are already seeing a decline, and we haven't even gotten started. And so what I'm saying is that for a lot of realtors, especially realtors and loan officers, the good ones, the ones that are here permanently, will tell you they'd rather see bad markets, because there's not that much competition compared to the booming markets like right now, because everybody and their mother has a real estate license. Everybody and their mother has an NMLS license. As a matter of fact, last year, we saw an increase in the number of people getting out of the MLO and real estate industry. Small, but it was noticeable, including here on my team. People that simply said, I decided not to renew anymore, and they're done. Well, guess what? The floodgates are going to open up this year. And so it's not about you focusing on who's staying and who's going. It's about worrying about yourself and making sure that your skills are up to par with the new reality of business, the reality of rising rates. I've been telling you this, so it's nothing to panic. It's nothing to surprise you. Correct me if I'm wrong. I've been telling you this, and it's here. And so what I'm saying is that I wish I could tell you that this is just a hiccup, and hope, like, before, they're probably going to go down. The government, for God's sakes, is telling you rates are going to go 3 times this year. So what are they going to do? Raise it 1/100 of a one? They're not going to do that. It's probably going to start with like a quarter point, boom, half a point, and they just ease it on in, because that's the way it should be done. I agree with the way they're doing it, by the way. We've been under this artificially low rates for too long. It's killing our savers. Low interest rates are good if you're borrowing, but it sucks if you're saving money. We deal with a lot on the financial services side with annuities. We have annuities right now that are locked in for 9-10 years, and they're paying 1.25%. That's horrible. That's not even the cost of the rate of inflation. I mean, what do you think a bank is paying right now on a CD? Anybody? Anybody? Anybody know?
1%.
What is it?
Probably less than 1%.
It's under 1%, of course. Now, here's something scary. What is a bank paying right now on your savings account?
That's half a point.
I mean, if you're lucky, I don't know where you're going to get half a point. Tell me where to get half a point, please. But I mean, the point that I'm making is that this is cyclical. It's not the end of the world. But I will tell you that this is, I was talking to some people. I was creating some flyers for them and postcards, marketing material, and I was telling them this is the most recent version of the postcard because it's always a work in progress. And the same thing that when you think you have arrived as a realtor, when you think you have arrived as a loan officer, is the day you start to die. Because you need to understand and we need to humble ourselves and realize that everything we knew how to operate just 6 months ago is changing. It's changing very quickly. They asked me to speak. I actually went to an event and Reggie was there. I don't know if Reggie's here. Reggie, you here? Anyways, Reggie was there. I went to an event in the city of Downey that was held for realtors. And I was there just to literally observe. I was just curious how they presented it to realtors. So I went there and they asked me to be a MC. They're like, hey, can you introduce the speaker? I'm like, well, I'm just kind of here to listen, but whatever. And so I went up there and the ones that don't understand the severity of what's happening are the ones that have no deals in the pipeline, just so you know. If you don't have a deal in the pipeline right now, you hear it, but you're not feeling it. And there was two very productive I don't know them, I know of them because I follow them on social media, so I know who they are. And there was two realtors, and I go, hey, by the way, because I was talking to them, I wasn't going to talk to them, I was just to listen to it, was regarding solar. And I go, by the way, this meeting here takes on a different meaning today than it did 2 weeks ago, because if there are any realtors here that actually have business, if you guys anybody have any escrows, and those people raise their hands, I go, something happened this past week that is going to change our world forever, at least to the near future. And I go, what is it? And both of them said, and everybody else didn't say a damn thing, but the two productive ones said, rates have skyrocketed. And I go, well, first of all, they're not skyrocketing. I go, they rose, yes. It had the same effect as if they would have got to 10% because they're killing deals. He's like, well, that's what they're doing. I go, well, I mean, it's true. Well, I mean, but the point of it is that this meeting, and that's what I was telling him, takes on a different meaning than if it was just 3 weeks ago, because that's how sensitive this industry is to rate changes. Just think about this for a second. If you ever want to know, now, what's the silver lining here with what's going on? First of all, has anybody seen the rising rates? Yes or no? Anybody? Of
course.
Okay.
Yeah, of course.
Is it good or bad?
Well, I mean, it is what it is. It's up a quarter on the rate, and we're still gonna give them a better payment, which is what it's all about anyway. I mean, who cares if you call it pink rate? It doesn't matter. What matters is what are you paying and how much are you saving?
Cool, perfect, okay. And what's the silver lining that you see, if any, in the rising rate market? Anybody?
Opportunity later on for future clients, because the rates are going up, and when they start to come back down, we go back to those clients and refinance them out of the old rate into a new rate.
So you're going to be able to build up your stockpile of rates of clients with higher rates that you can service them if and when they go down. Okay, that could be in 6 months, that could be in 5 years. Doesn't matter. A client is a client, by the way, and that requires for us to still be here in 4 or 5 years if it takes that long, because it's cyclical. So you're right. What else? Anybody?
Home prices steady.
Very, very good one. That's the part. That's the part that I want you to understand and appreciate, that is a great thing, because you've heard me and you've heard Red and we heard a lot of people. My philosophy is very, very simple. When it comes, there are 3 factors when it comes to, quote, affordability. Now, affordability in this country, we don't determine by the price of the home, for the simple fact that most people, the vast majority of people, don't buy a home cash. Now, if you go to, let's just say, Costa Rica. I was in Costa Rica and I was looking at homes because there's a good amount of Americans down there that retire there. I mean, but the problem is that there are too many damn Americans that retire there. And so therefore the market gets pushed back up. And anyways, average home price not too bad, like 300,000. However, it's all cash, no mortgages. I was in outside of Guadalajara in Mexico a couple of months ago, and there's a Lake Chapala. It's a very famous expat community, and I mean very famous, that I fell in love with it when I was there as well. So I was looking at homes there, but you better bring your big wallet with you, because again, no mortgages there. So in this country, we don't really do that. In this country, we don't. Hold on one second. It's my granddaughter calling me. In this country, we don't do that either, right? So what are the three factors that determine home affordability in this country for the majority of the people? Not for everybody, for the majority. Anybody? You got to know this as a loan officer, guys. Okay, are you guys there? I just want to make sure. You guys there, right?
Yes.
Okay. I thought you disconnected. All right. So what are the three factors? Three factors you got to be aware of.
A monthly payment.
That's one. I'm not reading chats, by the way. I'm not reading chat, so I apologize for that, because I got to switch screens, and every time I do that, it knocks me out of my thing. So payment is one of them, yes.
Loan amount.
And the interest rate.
Okay, go ahead.
The interest rate.
That's another one, yes.
The loan amount.
And the loan amount. Well, okay, somebody screwed it up. So can you guys say it all over again then? What is it?
Interest rates.
Monthly payment. The loan amount.
Purchase price, basically, okay? Okay, so let me go ahead and see if I can show you this. I'm going to try to show you this on my screen right now. So bear with me while I try to fire this up. Now, if you don't have this, and I'm not going to get too much into it unless I'm able to go ahead and show it to you. Let me just go ahead and let me see if I can go ahead. Do you guys, now you don't see the calculator on the screen, do you?
No.
I'm sorry?
No, not seeing your screen.
Okay, cool. Thank you. Okay, so let me just go ahead and go here. Hold on. Let me go back over here and try to pull it up. Hold on. And if not, what I'm going to try to do is I'm going to do this. Let me see if I can just go in here and type in. All right, so let me see if this pops up. I'm looking for a very simple, and I have one on my apps, but I don't want to have to fire it up right now. A very simple, here we go. All right, so here's, and I recommend everybody to get themselves a mortgage calculator app on their phone, because when you're with a client, you look like you know what the hell you're talking about. Very, very good. So let me just go ahead and fire this up on the screen, and just let me know if you are able to see it, where it shows a payment of $1147.
Yes.
Okay, so here's the way it works. My daughter's asking me, Dad, so what do I do? Because now she got spooked. I didn't spook her. I didn't even tell her. She got spooked, and I found out about her pre-qual with Rocket when she's like, she went from $3,600 a month, which is what she's paying right now, to her new loan with the Rocket, $4,000 a month by the rising rates. So she got spooked. And so I'm telling her, what would I do? I don't want to tell you what I would do, because I don't want to, muddy the waters, but it's up to you. It's whatever you want to do. I personally prefer very high rates. I love very high rates because they force the prices of homes down. In other words, here are the three factors involved in home affordability. The purchase price, and the reason I say purchase price is because the purchase price is very close to loan amount for most people, because they go FHA. Does that make sense? Most. And so we don't put down 50% down in this country. We just don't. If you're putting 5, 10, it doesn't put a dent in the payment, to be honest with you. It's not even worth doing that. I'd rather go 3.5, but whatever. I would much rather have a very high interest rate, because that means that my loan amount / purchase price will always be smaller, and I can attack it and pay it off faster. If I buy a home like my daughter right now for $550,000, 90% of that payment is going towards interest. And for her to pay down $500,000 with a whopping $400 going to principal, it's nothing. It's a joke. So the only thing she can bank on is equity. But I would not bank on her building up equity in a market that's about to go south. And so here's what I mean. We'll keep it simple. Loan amount, 3% down, 3.5% down, doesn't matter. We'll just call it 530,000. Interest rate 2.5%, which is what we have. That gives us a payment. Now I understand this is just there, $29.77. Can you guys see that? Right?
Yes.
Okay,
Yeah.
2,000 towards the loan, the rest is taxes and insurance. I get it. What I'm saying is that when we qualify people, buyers specifically, or even for refinances, we qualify them based on what? The monthly payment, the DTIs. We don't care about the price or the loan amount unless it's high balance, depending on the county, blah, blah, blah. But what I'm saying is that, now this is wrong because this is going to be, let's just say 3%, okay? So the payment is $39.52. If you want to get real with it, 3.5%, that's $39.36 with a $23,000 down payment. That's actually like my daughter's thing. So let me just go back over here because it's actually 532. There, 532,000. That's a 3161. Blah blah blah. Now the problem is that when you come in here, and this variable, there's three variables. Here we're talking about the home price or the loan amounts. It's basically the same thing. Home price, payment, interest rate. We cannot move around the payment because the payment is the result of the other two factors. And so what I'm going to do is if this one goes to from 2.5 to let's just say 3.625. Let me just go back here for two. Somebody's gonna have to remember this crap. 3161 was the payment. 3161. Now the DTIs. What are the typical DTIs? Let's just say on the FHA, the front end.
3%.
What?
43%.
And what are the front end and back end?
Oh, the front. Oh,
31.43.
Okay, 31.43. So what I'm saying is that in most cases, people are already at their close to the limit because we're pre-qualified. We pre-qualified them. Does that make sense? We did the math. People want to buy as much home as they can afford. True? That's just most people. And so, or in a booming market, it's not that they want to buy more home. It's that that's all they can afford. It's just so overly priced. So 3161. And my daughter's already pushing it. Let's just say she's not, but let's just say she's close to her maximum DTIs because she might have a car payment, this, that, blah, 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 whatever. 3161. If I move this to, let's just say 3.5, 3161, we're going from 31 to 34. And that starts to put a lot of pressure. Now, of course, when less people start to qualify for homes, the demand goes down. Prices, somebody said it earlier, are going to level off, but eventually, what do? They go down because the interest rate does not continue to go down. They're only going to go up. What do you think is the average in this country? Now, let's see if you want to age yourself. What's the highest interest rate you've had on a personal home loan yourself? Home loan.
10.5.
Oh my God. Okay. Maybe not that bad, but okay. Anybody else?
7.5 for me.
Okay. I mean, my first home I bought back in 1995 was 8.5. And I got a discount because I was a veteran VA. So what would you say is the average from a historical perspective, average rate? Anybody?
6.5.
6.5.
Can we call it 7? Okay,
Sure,
let's just call it 6.5. Let's call it 6.5. Now look at the payment. What did we start at? We started at what?
2.5.
No, but what the total payment was how much?
Oh, 3,100.
31.
3161? All right, call it 3,100. Look what happens when I go to 6.5. You see what I mean?
Yeah, but
And the
price of
reality-
house- but the price of the house during the 6.5 period wasn't 532 either, was it?
No. And that's what I'm getting at right now. So let's just go back over here and let's just say we call it 8%. 4,900. So if we qualified this person mathematically, at what was it, 3161 or whatever? Yeah, at 3100, what variable is left that we can mess with, meaning the market, not us, but the market can mess with to make it 3100? What's that variable?
The home price.
The home price. You think the banks are going to shut down all of their operations just because nobody qualifies for this home anymore? The market takes care of that. Nobody does that. Just like the government raises rates, the market sets the price. And so all of a sudden, if we go back over here and that puppy drops to 400, it's still not low enough. You see that? It won't support an 8. So we go
300.
300. So maybe the magic number is somewhere around
350, yeah.
350. And there you go. Do you see what I'm talking about? Does it make sense?
Yeah.
And so the reality here is that, and this is what literally the market does on its own every single day, because the government declares the rate. Now, personally, if I'm buying a home that I want to pay down because A, I want to build up equity, I want to pay it off, I want to retire there, or I want to turn it into a rental at some point, I'd rather start with 330 than 530. Does that make sense?
Yeah.
Yes.
I mean, that's just me. 100% of the time, I'd rather start at 330 if I'm going to go in. And so if I'm going to start, and so what I'm getting at and what I'm sharing with you, that this is the silver lining. Now, it's not going to happen overnight. I'll be the very first to tell you it's not going to happen overnight. But that's the direct, just like the 8% won't happen overnight. And so if I sit here and I mess with the 4.5, well, you're going to see the 530 go to 500, because two things: the mathematic equation helps us, but what's the other thing that's going to help us and this is what history has taught us basically, for me at least, in the last 20 years plus years of being in the industry and over 30 years of being a homeowner. What's the other thing we haven't calculated in here? That is, any guesses? What's going to accelerate this? And so what I'm saying is that rates are going to slowly go up, but there are factors that accelerate what you're seeing right here. And that is a psychological effect. Let me give you an example. Back in 1996, I bought a townhome in the city of Paramount. I bought a townhome there, and it was a foreclosure. I bought it through the VA. I bought it for, get this, now this is back in 1995 or 96, for $79,000, okay? They gave me $5,000 in credit to go ahead and fix it up, whatever. My neighbor, it was a beautiful complex, right in front of the pool. My neighbor comes over and tells me, hey, welcome to the neighborhood, whatever, blah, blah, blah. By the way, what did you pay for it? And so I told him technically $84,000 because they added $5,000 because of but technically $79,000. And his jaw almost dropped. And he told me he had paid $310,000, but I think 8 years ago. Well, to make a long story longer, next month, 30 days from when I told him that, I went looking for him. His neighbor told me, which is my neighbor, but it was his direct neighbor, that what he did, he couldn't believe how much money he had lost, even though he hadn't really lost a penny, and he let the property go. And he loaded up the family and they moved back to Florida, which is where he came from Florida. And so next thing you know, you have another property in the complex on the market on top of the other neighbor who was trying to short sell it at that point. And so what I'm getting at, the psychological factor accelerates this process, because now the opposite of right now is going to be true. Right now, demand is tight, but as demand as demand decreases, supply starts to grow. Does that make sense? And so the supply will be there because people will always get divorced. They will always die. But then when you start to throw on top of that, like I told my daughter, if you're going to be in this neighborhood, you need to know right now that in 5 years, somebody's going to sell their home here for less, literally a lot less than you not only paid for, but that you owe a lot more that they're even selling it for. And as long as you can deal with the psychological shock, you're fine, because they are considered paper losses. A paper loss means that it only becomes a realized loss if you sell it. Otherwise, it's just on paper. And so what I'm getting at is that people buying right now, the downside is you're going to buy it at the height of it. So the only time your home will ever be worth as much again is at the height of the next bubble. And it's just a cycle. But as a loan officer, you need to understand this because you need to be prepared psychologically that rates. I had two people kind of upset that, they had promised, not promised, but they have quoted certain rates that are no longer there. And I was explaining to them, look, you're supposed to be a professional. You're not supposed to be whining about how rising rates are affecting your production, because that's just part of the game. That's just part. If you can't deal, wait till you get to the rates going up overnight, half a point, quarter point. This is nothing. And so what I'm saying is that the silver lining is that the prices of homes are going to be forced down for the mere fact that that's the only variable that we can move around. The payment we can't mess with because that's just a result of the other main two. Here we have the interest rate that the government dictates. And so when the rates go up, so no, you're not going to have an 8% interest rate and the market is going to, or the price is going to stubbornly stay at 536 with the payment of $5,000 a month. No, it's not going to happen. It's not going to happen. And so that's the way it works. And so what does that mean for you and I? And it's really simple as I wrap it up here. And what that means is that you're going to have to learn a couple of new skills. It's kind of like, how many people here, if anybody had to learn short sales, did anybody have to learn short sales? Back after 08?
Yes, I did.
Who the hell ever thought we were going to have to learn short sales, negotiations? Remember all that stuff? If you don't remember, they'll be back. You better break out your handbook on that, because what I'm telling you is that it's going to happen again. Not right now, and I would say not this year. What you are going to start to see is the supply continuing to be what it is, because people always get married, they have kids, they want to retire, but the supply is going to start to loosen up a lot, and so you're going to have to psychologically be ready. Now, another silver lining that some realtors always talk about is, again, they'd rather be realtors than loan officers when times are, quote, bad. Meaning not that they're bad, but higher rates, because all of a sudden, I'll never forget in 08, I don't know if Anthony LeBlanc is on the call, but he was with us. We had an office right there on 183rd, right behind the Cerritos Auto Square. And I remember 08, 09, there were lines of realtors and loan officers lining up to surrender their BMWs and their Mercedes to the dealers right there, all the nice cars, because they just couldn't do it anymore. And the membership in CAR dropped, the membership, meaning the California Association of Realtors, and everything else just dropped and dropped. So what I'm getting at, it's not a dire picture. I'm just saying psychologically know that you're going to be in a good place if you're still here, because a lot less competition, number one. Number two, people are going to require more guidance than ever before when it comes to being a realtor that's going to guide them through a sales process in a declining market, because not only do people buy homes when they're very expensive, but people that bought them when they were cheap, they kept refinancing them. I have one person in mind. This person refied every 6 months, but not only did they refi every 6 months, what else did they do every time they refied?
Got into more debt.
Look, cash.
They took cash out.
Cash out, of course. And so we're right back to what I was telling you about, that a lot of people are maxed out LTV wise already. So the psychological game is going to kick in. This is a great thing. Not that I want to see anything bad happen to people, but because I'm telling you, for those realtors, MLOs that are prepared, it's definitely going to be not a new game, because we played this game years ago, but a lot of people here have never been through it. And so what I'm saying is that you have to start mentally preparing yourself for this opportunity to come in and serve in a different way. Again, mortgages have never gone away. They will never go away. But how they are acquired and how we market them is going to change. Another thing that's going to be really cool for realtors that are up to speed. I don't know if Walter, are you on board, Walter? I don't know if Walter's here.
Yes, I am.
Okay, Walter, can you share with us, you went to San Diego for a home ownership seminar, right? Now, it was in your event. He just went to be a fly on the wall.
Yes.
But that is the model, just so you know, that is the model of the future for loan officers and realtors. Can you share about the event? Did it impress you? Please.
Sure. Yeah. What happened is a friend of mine who's a realtor invite me to see this seminar in San Diego. And they put together two different companies. One was a broker, realtor who had like about 30 agents there, and the mortgage company who was a broker who provide all this different type of loans, BAs, and he was pitching, how to save money, how difficult it is in California. But, and there was over 100 people, was 110. And basically the title of the seminar was, if you're a first-time buyer, get the information with us. They provide a free dinner, kind of a buffet, an hour and a half. And it was a lot of people, interested in buying. And for me, basically was the opportunity to, by the way, I already signed him up as an ambassador to Carlos, who is the real estate, for the solar business. Yeah. And also next week, I have an appointment with Liu Ha, who is the broker, to sign him up as well. So.
Perfect. Thank you. And the reason I share that is because the business model of homeownership seminars, first-time homeowner seminars, they are going to be critical moving forward because they do one thing. They establish credibility for you as a loan officer or as a realtor, and we're going to help you do that. For those that haven't been there, and I don't think anybody here has been there, Rhett has a place in Gardena that we're going to be using. They're literally are in the process of clearing it out. It's actually his father-in-law's business. So they build furniture there for restaurants and stuff like that. Well, they're opening up the office portion. It's wide open. It's going to be able to sit probably 80 people there comfortably. And we're going to start doing live events to show you how to do just that, because marketing approach is changing. Up until now, it has been all about the lower rate. That's not going to be the case necessarily moving forward. It's still going to be to a very small degree, but your approach is going to have to change. There has to be more to you than just low rate, because it's going to be difficult to win that game when the rates are changing every month. And as you know, we don't like to lock in. If you lock it, like Rhett said, if we lock in a rate on 45 days right now, it is out of control. So therefore, we usually do 15, 25-day lock period at the longest, because the longer you lock it for, the more expensive it gets. My daughter's in escrow right now. I told her, I don't think they're going to be able to honor that interest rate of 3.625 in a month because they haven't locked it in. So just get ready to make a very tough decision when they come back and say, actually, because it wasn't locked, because they couldn't lock it, your new rate is going to be 4.25. And that means that your new mortgage payment went from from 3,600 to 4,200. And I think she's going to have to walk. I don't know, but that's tough. A lot of realtors, loan officers are putting in a lot of work right now on deals that are just simply not going to close because of the changes in the market. And so we have to adjust quickly so that you're not one of these loan officers that's frustrated with how you lost the deal. I'm going to tell you, you should have known. You should have known better, because the way that it was priced, and it's tough to price it against other people like me. I can't price a loan against KB Homes that they're not locking it in when I'm trying to price something locked in to guarantee my daughter an actual payment amount that they control the closing, not me. And so if I compete with them by not locking it, then what? The answer is who has the lowest new high payment at the end. That's not a game you want to play, because you're not going to be able to win, because they control other factors like closing date and so on. And so I'm telling you, it's great timing if you understand the changes in the market. It's going to be a very bumpy road on your way out of the industry if you're not. I hate blowing smoke. I hate giving false hope. I don't do that. I've never done it, and I never will. I'm telling you that the good news is that the market's going to clean up a lot. Everybody's going to be, by next year, I mark my words, we will have half the loan officers that renewed their NMLS. That's just the nature of the beast. Schools are already looking at the dramatically. Some of my friends are closing down their physical NMLS schools already. They're going to keep it online because of the simple fact that they don't want to have the expense of a lease, if you would, in a declining market. And that's a smart move. I think that's a very smart move. Move it online, 100% online. That way, if need be, you can do it for 100 people or 10 people or one person, and do it from your home versus running an actual school center, which is not a good model to go into right now. And so again, not a bad thing, but I'm just telling you that with the changes that are coming, you want to be ready for them. And one of the things that, in my opinion, you need to do is make sure you are not caught by surprise, because as the realtors that I was there to speak to, I was just there to, it was a lunch and learn in Downey that I was there just as a guest. And one of the guys just asked me, hey, can you introduce the speaker? All right. And it just so happened to be on the day that these realtors were banging their head because their deals are about to fall apart because of the new higher payment. Their clients don't qualify for it. Has anybody seen anything at all? If you have any cases, I'm saying, of course, or any coworkers have any deals just with the little changes in rates we've had so far? Anybody? Okay, good. Either, you haven't seen it or you don't have a deal. Either way, it's fine. I don't want it to happen to anybody, but let's not stick our head in the sand either. Any questions about that so far? Any questions at all? What I do want, somebody was asking me, we have some of you that were on my earlier webinar, and I was talking here. I closed it because I didn't think I was going to need it, but I'm going to share it with you guys. Let me just go ahead and share this with you, and I want to give it to you as a gift. Here we go. Webinar. Hold on. Let me just share it with you because I closed it because I was done. I think I was going to need it, but somebody's asking me if I have it. If you were on the earlier webinar, you should have this, but if you don't, I get it. Let me just get it to everybody, and you can all have it as a gift at the beginning of the year from me to you. So let me just go ahead and do this. And what I'm going to do is I'm going to give you a special gift. I believe part of my business philosophy, which is actually part of my life philosophy, is in leaving nothing to chance. Don't leave anything to chance. Rates are going up, I'm going to win. And people around me, some people around me are going to win. Rates go down, I'm going to win. And some other people around me are going to win, because I know people that wasted the whole historic low rate season we just came out of. They didn't close a damn thing. And so I know that when rates go up, they sure as hell not going to be closing a lot. And so the point that I'm making is that I want to give you a gift, and it revolves around these. These are Greek philosophers, if you would. And the ancient Greeks had a quote, or they referred to some people as having something that they refer to as the eternal restlessness. And the eternal restlessness simply means that you feel deep down inside that you were destined to achieve great things. I've had that my entire life growing up. I'm the youngest of 9, single mom, the whole 9 yards. And so for me, I always believed that my family deserved more. I always wanted to grow up and not have to worry about money. I always wanted to grow up and explore the world and see the world, not just kind of hear about the world. And I always wanted to help my mom. Like I told you, she was a single mom. And all these things that nobody else could do were always not done because nobody had money. And I felt, again, that eternal restlessness that I know some of you here hold inside as well. And when I later on joined the military, had some stability, but I was restless inside once again, knowing I was destined to do something. And then after that, I went ahead and joined the police department. Best job I've ever had. And again, that restlessness came back. It never goes away. And it ends up being either a true blessing or a curse. All of you that are on this webinar right now have it. That's why you're here. You're not here through chance. You're here through destiny. And I would tell you, excuse me, regardless of to what degree you've developed that urge to succeed, a lot of you are very successful. There's room for more. And there are some of you that haven't hit the level of success you feel you were destined to achieve. And my goal is to help you get there. And so, again, for me, it starts and it ends with my family, and it starts and ends with my kids. Now, my grandkids. I told you my daughter's in escrow. Her escrow was in danger because there's more cash that needs to be closed to close the escrow. I told her, don't worry, I got your back. I gave her a gift to get into that home. But what she needs now, I told her it won't be a gift, it'll be a loan. She can repay me over time. But but the point is that she won't lose the home because of the lack of money on my part. I would not forgive myself to not be able to get my daughter inside a home, because I know how much better it is to own, even with an expensive home, instead of renting. And so I want to be in that position to do that. I want to be in the position to, I just came from Mexico City. I was there dropping off my mom at her hometown. And just like a shuttle, I took her and my brother there, dropped them off, spent a night. The next day, I'm on a flight right back over here. And I like doing stuff like that because I can. And I think, again, that eternal restlessness can be an incredible blessing that pushes you forward, or a horrible curse where you will never get away from it. If you're on this webinar with me right now, I guarantee you, you are destined to be part of that success that you know you need to have, you want to have, because you're not being selfish, because you know that you cannot pour from an empty cup. You cannot give to others what you yourself don't have. And so I want to just give you a small gift, which is something that can help you, like it's helped me so many throughout the years, which is simply what you see on the screen. It's something called Enlightened Goal Setting. I challenge you to please read it. I want you to go ahead and study it if you want to make 2022 your year. For some of you, you're not going to be here in 6 months. I'm sorry to say that. And it won't be because of the lack of market, because the market will change, but it's still going to be needing what we offer. It won't be lack of leadership, because I want to provide you to that. It won't be the lack of opportunity, because I will help you with that as well. It's just simply because you gave up. And to each his own. One thing I do or I don't do is I don't make other people's problems my problem. I'm going on my 30th wedding year with my wife, and part of my philosophy has been, there was a point in my time, especially in my early years of this leadership business, where I did come home with a lot of other people's problems, thinking how they could solve those problems, only to go back to find out that those people went back to their mess without even caring. They left me all pissed off, in a grumpy mood, arguing with my wife over something that wasn't even my problem. And so I made a decision. I will not make other people's problems my problem. When this webinar ends, it ends. The number one complaint I get from people is, hey, I texted you. Hey, I emailed you. Hey, I go, why didn't you speak up during the webinar? Because that's the time when I ask you, do you have any questions, comments, or concerns? If you tell me you don't have any, well, see you next Saturday. Because again, unless it's help regarding business, I don't want to just discuss issues. I don't want to discuss water cooler talk over rising rates and crappy market. That's not me. And so I hope you understand that I don't say that in a bad way, but I say that in a sincere way, that I want to go ahead and help you do just that. And so lastly, if you want this, I'm going to go ahead and give you the actual link. And it's a very, very good workbook. I paid for it. You are not going to have to pay for it whatsoever. And so without any further ado, let me just get this over to you. If you can just let me know if the link works for you. Somebody click on it, please, and just see if it downloads. And if so, then one last thing before I got to switch PowerPoints. If somebody can let me know if that worked or not, I'm going to have a special webinar this Saturday. Two of you have been asking me about something that I really shouldn't bring it up, because I already told you about this a long time ago. And that is the, let me see, why the hell did it go? I had it here. Oh, here it is. Okay. About the, first of all, did that work for anybody? Anybody?
Well, it worked on the last one. I didn't try this one, but I'm sure it's
okay.
fine.
Okay. Well, it's the same thing, so it shouldn't be. All right. It'll work. So, can you see the one that says mortgage rates, Stephen?
Yes.
Okay. The last thing I want to talk to you guys about is unrelated to this whole thing, but it is kind of related. I think that one of the most important things to do in business is to always understand that if there's something you can do, guys, if you want to share anything, there you go. Perfect. Let me know. Perfect. Thank you. And so, make sure that you understand that there are times where you have to step out of your comfort zone, or what you feel is your ideal vehicle, and do something that might be a little different to keep you in the game. The number one reason people fail in any business, I have people in the life insurance, mortgages, real estate, and the number one reason most of them fail and give up and quit is because they were not able to last long enough to see their efforts compound. How long do you think it takes for you to build up a good book of business, for you to say, okay, I got the hang of it now. Referrals are coming in. And so as a realtor, how long do you think it'll take to establish yourself as a realtor? Anybody?
About 2 years.
Okay, that's your opinion. Anybody else? I say 2 to 3 is what I usually say. 2 to 3. If you're really going at it, 2 years. If not, and I call them seasons, by the way. You got to go through 3 Christmases, 3 Thanksgivings, 3 of everything to really establish yourself, to start to generate the referrals, which is where it's at. You don't want to be a first generation client seeker your whole life. That's horrible, man. If all you're doing is working with people, thank you, bye, next one, the next one, the next one. I want to be at the point where I'm living like Rhett off referrals and not have to worry about where my next deal. I guarantee you, Rhett will see this coming market shining like you wouldn't believe, never spending a penny on marketing just from all the clients he has. So let's just say 2 to 3 years. So the question is, my God, can you imagine? I saw somebody post on an MLS board the other day. Well, good luck to us new guys. First of all, he's right. Number two, that's a horrible attitude to have because you're kind of already giving up. So I'd say, you're right, but you got to have a better attitude. One thing I would encourage you guys to consider is something I spoke to you a while back, and that was on the solar side. I just wanted to share something with you, unrelated, but it is related to, especially with, like I said, I was in Downey because the solar people were doing lunch and learn for realtors. And I was just curious, how do they present to realtors? Are they doing a really good job or whatever? So I went down there just to be a fly on the wall and then asked me to open it up for them. And I shared what I shared with you earlier. But what I want to share with you is, since I spoke to you back in December about this, this is what people have been able to do. These are people that have come on board as actual consultants as part of my immediate team. And the one thing I will tell you is that I like to make examples of success. Now, before you say, hey, I thought you were the life insurance guy. I thought you were the MLO guy. Listen, I'm the marketing and results guy and income guy. I like to get paid. I really don't care where my direct deposits come from. They enabled me to do what I want to do in life, which is enjoy it. And I want to die with memories, not with unfulfilled dreams. And so for me, I don't care if you want to send me a direct deposit via Zelle, send it. I don't care. I'm not picky. I know that I'm in marketing, and this allows me to be a better MLO, a better life insurance agent. The life insurance agents allow me to be a better trainer for you guys, and so on. Understand that you are or should be in the business of marketing. So anyways, just to show you, this is where the team has grown in just a little over a month, as you can see. And I'm happy to report to you, I got my report the other day from just one of what are called mentors. And this is what, and I got to find it because I wasn't going to do this, but I just want to share this with you because this, I don't want to leave anybody spooked. And this is what he sent me the other day. He said, here's your rundown. Ilya, it's one of my consultants, has 2 proposals. One was already followed up on. The other one needs to be presented. Walter is getting 1 project getting installed, 1 project past site survey, and following up on the 3rd one. Ramos, 1 project past site inspection, and 2 needs a proposal on another one. Hector, 1 proposal was presented and needs follow-up, and the other one needs to be presented to a client. Anthony LeBlanc, 2 proposals presented, follow-up. Rhett, 1 submitted, he submitted his first lead yesterday. Michael Johnson submitted his first lead today. Also, Adebayo Windonkun just went ahead and closed his first solar project, signed the contract. Michelle Cianfroca, the exact same thing. So we have around 17 deals, 17 in a month, that at the end of the day, let me do the math for you, on average commission of $7,000, that's $119,000. And there we go again. Just like we've made millions on the real estate side, mortgage side, life insurance side, here we go again. Here we go again. And so again, it allows you to funnel your profits, if you would, and subsidize your mortgage business, your real estate business. And the best part is you're just simply going to go ahead and talk to people you've already spoken to in the past. So anyways, I'm not going to bore you with this, but I do want to publicly congratulate Mr. Walter Meneses. He had his first installation take place yesterday from beginning to end, even though people say, oh, no, they're taking 3 months and 4 months. That's not true. From beginning to end, from the day the contract was signed to installation, which was yesterday. How long did it take, Walter?
3 weeks.
Wow. Incredible.
Yeah, it was a record. It was 3 weeks, and my next deal is going to be installed next week. So that's my second deal. Yeah.
Outstanding. Congratulations, Walter. And
are
you glad you did
I'm
it?
sorry. I think I have to give a lot of credit to Anthony Bonilla. He's a really professional. I think the deal is in the follow-up. He was basically on every single task, yes. And the support is amazing. So, couldn't do without it.
Perfect. And just out of curiosity, what would you say is the average amount of time that you put into something per deal to get paid what you got paid? What was it? Like how much time?
It's not even less. It's less than 2 hours. You know, when you put all together the follow up, the phone call, prepare, go over the proposal, go over the. It's not even 2 hours. 2 hours and a half, maybe max. You know,
max.
And also something very important, when we signed the contract, I got my $1,000 advance, 20%, just 24 hours after that. So I got $2,000 already for the 2 deals.
Wow. Incredible. And, you know, and the beauty behind this is that that's what it's about. We're holding a special webinar, a private one. I'm doing it myself this coming Wednesday. Do me a favor, if anybody here is interested, I'm not telling you to do it. I'm not saying it's for you, and I'm certainly not saying it's not for you. But if you want to look into something that can subsidize and in some cases surpass anything you got going on, and you have 2 hours a week to spare, the average commission is $7,000. $7,000. So do me a favor. That's my cell phone number right there. Text me. I don't want to bug you, and I'm not going to bug anybody, but I will remind you when we start the actual webinar. It's free. It's only 30 minutes long. And at least you will know what all these other MLOs that you saw on the screen, Rhett, like Rhett was saying, this could not have happened at a better time for him because of the rates and so on. And I want to make sure that we give you the chance to be able to do that. Only one thing I ask for you, if you're going to come work with me and they're going to be direct to me, just like Walter and like so many other people, be ready to make money. I'm not looking for people that are looking to join a social club that doesn't pay bills. I'm looking for people that are, again, filling out their goal worksheets and understand that at the end of the day, who gives a crap where the money comes from, especially if it doesn't take you away from real estate, from mortgages. You get to do what you still do, but you got a few hours a week. You can cash in on those hours, and it beats the heck out of watching, the Real Housewives of Orange County, of Inland Empire, or where the hell they are now, or anything else that's going on Netflix. I just focus on results. And I will promise you this, and you hold me to it. You hold me to it, that if you do your part and I do my part and you don't win, then you let me know. And then, of course, I'll be the first to admit we fell short. But I don't quit. I don't, fall short on anybody, because this is simple math. Just like the mortgage payment I showed you. You give me the interest rate, give me the loan amount, and I'll give you the payment. This is the exact same thing. You put in a few hours a week, and before you know it, your client base is growing. Your clients will love you. It's the only business I know where we're in the business of putting money in their pocket, nothing out of pocket for them. It's just an incredible thing. So text me 562-237-3683 if you want to be a guest. Doesn't mean you're going to do it. You're not committing to anything. But I hate, as you saw what happens this December, we've got $100-something thousand coming in. I would hate for you to not have done anything, and then later on, once you join, and you're going to be that far behind everybody else. All right, write that or take a screenshot of that, please, because I'm going to delete it right now. And I just want to go ahead and say thank you for all that everybody does. Remember, don't let these rising rates spook you. Don't do that at all. It's the rules are changing, the game is changing. You just change with it, and you're going to be fine. We're not shutting down our operation. We're actually growing it. The only difference is this, and I need you to understand this. We are not taking on board any brand new people anymore. If somebody comes to us with zero experience, a lady just keeps calling me, and I already told her more than once that thank you, but no thank you. We are not looking to sponsor you. We're not doing that anymore. We're going to be focusing on the ones that are already here. It's hard enough with the people that are already in, let alone trying to take, and these poor people, I feel so bad for them. They're running around with their brand new, newly obtained MLS license. Nobody wants them. And nobody's going to want them. And I sure as hell don't want them here, for the simple fact that I'd rather put my focus on people that are already here trying to make it work versus trying to take somebody from scratch all the way to the top. So it's going to get messy for a lot of people, but thankfully not for you, as long as you do your part as well. Questions, comments, concerns from anybody? So far, I only got one text from one person. That's all I'm going to be texting and inviting one person. And that's fine with me. Like I said, it's going to happen regardless, but I just don't want anybody left behind. I hate when that happens, people getting left behind on purpose or whatever. And I don't want that to happen to you. Last call, questions, comments, concerns.
Quick question.
Go ahead.
There's new California solar regulation or something. Is that affecting what you're doing with your solar?
Yes, it is. And what's happening, just so you know, it's never about the environment for the government, and it's never about savings for the client. It's always about money for them. And so what's happening is they're trying to roll out what's called net metering 3.0. And so what that simply means is that now what's happening, there's so many, it's kind of like electric cars. They want everybody to go ahead and go electric because it's better for the environment. Well, guess what? I have 2 electric cars. So I don't go to the gas pump. I don't pay taxes on fuel. So what they decided to do is tax us more when we renew our cars. Does that make sense? The new way of doing it's okay because right now, I'll give you an example. I live in the Inland Empire. It's hot. So my bill in the summertime is around $600 a month because we run the AC 24/7. Most of the year, it's around $350. It's about $350. And so what does that mean? That means that I'm saving an unbelievable amount of money that Edison is not getting. So the net metering now says that because I'm saving so much money, they want me to pay an extra $50 connection fee to make up the money they are losing, which is really not my problem. And so, yes, it is gonna, if it goes through, I heard that they already pushed it back from this vote with the Public Utility Commission, but it's gonna go through eventually. And so now, instead of saving $300 a month, I'm saving $250, which is still a lot of money. And so it is definitely, so the good news is that any system that's installed between now and May, I believe they moved it back to now, is staying or grandfathered into the old way of doing business. So that's why everybody's rushing to get it installed right now, because the savings are going to go down and they are going to affect us, not to a terrible degree, but why pay them more than you have to? And so if anybody here is considering going solar, zero down, 1.99% interest rate, cut your electricity bill with, especially if you have Edison, by at least half. Do it before, as soon as possible, because once this net metering 3.0 goes through, your savings will be reduced by around $50 to $60 a month. And then after that, they'll have net metering 4.0, because eventually it's all about the money. Edison has so many people. When you pay your Edison or your electric bill, you're not paying for electricity. 90% of your fee goes towards salaries, pensions, benefits, crap that has nothing to do with you, that now that you generate your own power, you don't need them. And they don't like that. So yes, it is going to affect us, Stephen. Thankfully, not that big of a degree, but why give them more than you have to? Does that make sense?
Thank you.
All right. Anybody else?
Well,
right.
yeah, just to add to what the 1.99% interest rate and the zero down. What isn't there? There's something else that's missing from that. 1.99, zero down. Huh.
The years
it's a 30-year bumper-to-bumper warranty.
That's right. I was asked by a prospect about the
30,
finance, whether it was like a hero thing.
Yeah, no, there's no lien on the property. There's no lien.
It's a commercial loan, right?
No, it's a personal loan, and
so personal loan.
Yeah, it's a personal loan. There's no lien on the property, so it doesn't affect it. The most anal guy on earth that I know is Rhett when it comes to real estate and mortgages. And when I first told him about this, no, that's not good for the customer because the liens don't allow us to refi. And him and Rosa tore it apart like you wouldn't believe. And after they were done tearing it apart, he's like, you know what? I got to join this. I know where rates are going. I know what I need to do. And so now he's building his team here as well. And so if it passed the red test, trust me, man, my God, that guy can be difficult when it comes to looking at all this stuff. But I'm glad we have him on our side. And he did that. Also, the panels that I'm getting for my home, they come with a guaranteed 92.5%. So what that means is that they guarantee you that in 25 years from now, they are still producing 92.5% of the power they were generating on day one. If not, they replace them for free. Unbelievable, because they all degenerate over time. And so it allows you to have that peace of mind. It's 30-year bumper-to-bumper warranty on the panels, the components, the installation, the roof where they installed it. And if somebody needs a panel, like me, I needed a much bigger panel because I'm getting a big system. I have 2 electric cars, a pool, the whole 9 yards. Then they're including the installation of the brand new power panel into the loan with nothing out of pocket. And my new payment, it actually went up a little bit. It's now $160 a month when I was paying, like I said, $600 in the summer, about $460 the rest of the months. for 170. So yeah, it might go up $50 if I don't hurry up, which I won't. I'm hurrying up, but even if it goes up $60, that's $200 compared to $600 and helping out Mother Earth. That's something you go to every person you know and say, hey, let me show you something that's going to blow you away. And then what we're doing is everybody that gets a free quote, we're giving them a free vacation, 4 days, 3 nights in Las Vegas, just for the free quote with no obligation behind it. I'm telling you guys, text me. I'll add you to it. There's no obligation. You know me. I don't beg, bug. I just want to make sure that you don't get left behind. Don't get so caught up in your mold that I'm a realtor or I'm just a loan officer, or I'm just a life insurance agent. Don't do that. You should be a marketer, and marketers get paid very, very well. So far, 2 names.
So Wednesday is open to guests.
Yeah, it's only guests at 6 p.m. Guests at 6 p.m.
6
Pacific
p.m.,
Standard Time. Pacific Standard Time. Only guests. I mean, you can go there if you want to, but I mean, it's for a guest. But I'm still trying to find the people that I already know to get them situated. Like Walter said, you're going to spend 2 hours on a sale and get paid thousands of dollars. I mean, okay, we do that. So if somebody asked me for the phone number, but there. Oh, hold on, let me just put it back up there. I'm sorry. Okay, I took it down because I thought everybody had it, but if not, it's on your screen. 562-2373. I'm not begging you. I promise you. I just want you to take a look at it. And the amazing part of this, I've gotten so many sales myself just by sharing my story. I don't have a corporate brochure or a glossy brochure. I just tell them, look, here's what I was paying, and here's my proof. Here's the proposal they gave me. They actually emailed me my latest one yesterday, which went up to 160 because I got the I wanted the panels. Just so you guys know, I'm getting a ton of panels, like 24 panels. They each have their own micro inverter into each panel. So the way most solar systems work, there's only one inverter for the whole array. And if the one panel goes out, the whole array goes down. Mines have an inverter in each panel. So if one panel goes down for whatever reason until they come replace it, the rest of the panels are pumping out power the entire time. Incredible to be able to do that. So, all right. Thank you so much, everybody.
I'm sorry.
Go ahead.
Wait a minute. Okay, wait a minute. Okay, so we're gonna send them a link. When are you gonna publish the link?
The ones that I'm referring to, 2 things. Those that want to work directly with me, which are the people that are texting me, I'm going to text them right now all the information right now. Your job is to follow up with your guests. Have them go to solarwebinar.us at the date and time I gave you, and that's the date. But you got to follow up with them. I'm talking to the people that are here that would like to work directly with me and have some of the success that everybody else is having. Does that make sense, Gary?
Yeah. So I just want to know how to get them the link. That's all. So
yeah. Solarwebinar.us. Okay.
There
was somebody else.
So
go ahead.
My question is regarding to that that mortgage app thing that you were showing everybody on it. Can you put a link to that or send it later, or does Anthony?
Let me put the link to it right now because I don't want to promise you anything. I'm doing it right now. Okay.
Thank you, Javier.
Hold on. Here we go. If you go look at the chat, let me know if it opens up, Keith, just from you. If you could go ahead and let me know. Let's see.
Not yet.
No, not. And it should be there. Try it, please, and let me know if it opens up a calculator that you saw on the screen.
It did. Yeah. How much? Yeah. Lendingtree.com one. That one?
No.
Not that one.
Oh, there's a ghost in here.
Wait.
Right at the top. You don't click on anything. It should open up to it. Just scroll down.
I think I have it. It has the 1147 payment on it.
Yeah. That you're gonna mess with. You're just gonna put the different prices or fields in it. Okay, but that's it.
Okay. Thank you very much, Javier.
Just hit the slider to include taxes and fees if you want to. There's a little button slider.
I see that. Thank you. This is. I have a loan in there with a gentleman, and now I'm. Uh-oh.
There you go.
Anyway,
all righty.
Thank you, sir.
Thank you. All right. Anybody else, please? Questions, comments, concerns? Anything? Please. All right. Remember, if you haven't done so, like our YouTube channel, like our videos. Next week, we're going to talk about how to leverage the power of YouTube videos to market. Some people don't like working with buyers. As loan officers are concerned, you're going to have to learn to do it. If you want to succeed, if you want to see yourself to this, and next week we're going to talk about how to work with buyers as you, the MLO, and most importantly, work with realtors that are going to bring you their buyers. You don't have to go look for the buyers. I'm talking about you working with buyers that other MLOs, other loan realtors bring to you. And I'm going to show you how to do that next week. We're going to have to step up the skill and make sure that, again, another thing that we have rolling out is a new app that we're going to roll out for just our loan officers that are with us, that are going to allow you to train on videos on your phone, which is being developed as we speak, because we're going to have to step up our game knowledge-wise and execution-wise to make sure that nobody gets left behind. All right?
Hey,
Thank you
Javier.
so much.
So I
Yes,
have
go
a
ahead.
question. Do you think it's a good idea to cold call realtors?
I'm sorry?
Do you think it's a good idea to cold call realtors to kind of have them work with you?
Yeah, I mean, the question is not is it, does it make sense? Absolutely makes sense. But we actually have, and I'll give it to you next week, we have scripts that will help you on top of whatever you're doing right now.
Okay, great. I appreciate that. Thanks.
All right. Perfect.
Hi, Javier.
Go ahead, please.
Hi, I'm sorry I had problems with the audio. I wanted to ask you for that calculator. I thought everybody was gonna get it. I didn't get it.
It's in the description.
Oh, it's in the chat for everybody?
Yes, in the chat. Click on chat. And it says to everyone, and it shows a lot of blue lines, blue letters. It's a link.
Oh, I got it. Yes, I saw it. Yes.
That's it. Okay.
Okay, it's on Google, right? Yes.
Yes, that's it. It's a Google calculator. It just opens up automatically.
Okay, great. Thank you very much. Thank you.
Thank you. Thank you. Anybody else? Anything, please. Last one, once, twice. If not, thank you so much for all that you do. Please stay safe and above all, stay healthy. And let's make this coming week the most productive week in the history of our business and allow yourself to stay in control of your mind. Don't give it to the media. Don't give it to people. Don't give it to the naysayers. Understand that as long as you do what you need to do, the coming year is going to be a very good year, as long as, again, you execute when you're supposed to. And I can't wait to talk to you next Saturday about how to market to realtors. I'll give you the scripts, videos, links, and I'll even give you free certificates to give to them just for giving you 5 minutes of their time. All right? Thank you, everybody. Bye-bye.